Welcome to the trade of the month for August 2018, and today we're going to look at AllianceBernstein Holdings versus KKR and Company. And there were some trades this month in August of the new top 30 that had bigger results, higher profits, but I've chosen this one because I think it's more of a textbook trade, and the setup when the trade happened I think is it looks better than some of the ones that came in with higher results. So let's go to it quickly. So the trade signal, the entry signal occurred on the 2nd of July, and that was to go long AllianceBernstein and short KKR and Co. And so we did that, and let's go and see what these companies are before we check out the setup. So if we go quickly to our fundamentals, we've got AllianceBernstein and KKR. Profiles here. AllianceBernstein, it's a publicly owned investment manager. It's a very large one. It provides research services to its clients, and the clients are investment companies, pension and profit sharing plans, banks, thrifts, trusts, estates, basically all of the institutional investors. And they invest in public equity, fixed income, alternative investment markets, i.e. private equity and hedge funds, and they do it across the globe. Importantly, they also employ long-short strategy in making their investments, so they're also pair traders. That is AllianceBernstein, founded in 1987. Then over here we have KKR, which was or is a private equity management partnership founded in 1976 by Henry Kravis. So let's go through their description very quickly because they have a long one here. Basically, private equity and real estate investment firm specializing in direct and fund-of-fund investments. So these guys, Alliance, are very much a typical money manager, alternative investment manager. KKR is a much more direct player. So they do private equity, they do buyouts, leveraged buyouts, management buyouts, growth equity. They'll take majority or minority stakes. They do a lot of real estate as well. They operate worldwide, and again, the firm typically holds investments for a period of 5 to 7 years. They have a number of different funds that they've raised, and again, they're making direct investments, whether majority or minority, whether in the equity or in the debt of the capital structure. So while there is a significant difference between the business models of the two companies, they do share the same client base, and they are performing the same function, which is investment management. And if you see, they're both New York Stock Exchange traded, both in financial services, both in the sub-industry asset management. Let's go quickly to financials on them. If we look at their statistics, we've got a market cap for AllianceBernstein of 2.9 billion, a market cap for KKR of 13.7. Okay, EV here is huge because obviously they've got a lot of debt on their leveraged buyouts, and those are reflected in the leverage ratios as well. But how are these businesses typically valued? Usually on a price to book basis, and if you see price to book 1.73 for KKR, 1.92 for AllianceBernstein, they have a very similar. The market's treating their book value very similar, and EV to revenue, which is a very broad measure of value, 11 versus 8.6. They're not too far off. Look, I'm not saying these are very similar companies, but they are companies whose economic performance is going to be derived through very similar sets of circumstances. They're both investment managers, globally dealing with institutional clients as their client base. Okay, so you can determine whether or not that's a close enough fit for you on a fundamental basis or not. We have determined that we think it is, and the backtesting results tend to suggest that it is. So let's quickly look at those. This is a top 30 pair, but it has decayed slightly over the last little while. This is Yahoo data, and I think when this pair was originally selected, it may have been done through IB data, which has slightly different results. But let's look at the backtest. Got a 3-year backtest, 13 trades, correlation 51.5, pretty good. Co-integration 0.96, excellent. Compound annual growth rate of about 14%. Max drawdown 18.8, so slightly higher than CAGR. So there's been a bit of it hasn't done so well over the last little while because that should be higher and that should be lower, but they're still within tolerances. Does about 361 average net profit per trade, and 77% of the trades are winners. Now let's be clear, this includes the last trade, because we're looking this in September now, September 3rd today. So the other thing we want to look at, but what you can see is a nice equity curve. 77% winners, bottom left to top right, with not any kind of scary drawdowns in it. Average days in trade, we want to see that because that's important for our planning purposes. And our average days in trade are 24. So they've come close, they come through very quickly, which is good. Let's look at how they've performed on a relative basis. One thing you want to see here, even though they're correlated, you've got this high co-integration. You want to make sure you can see that co-integration. And so if we look over the last year, here's the relative performance, and we do see it. So when they come apart, they come back together, come apart, back together, come apart, back together, come apart, back together. Same thing here, same thing here. And this is the trade we actually take. We'll look at it in more detail now. So yes, we're seeing this crisscrossing, this coming back together. That's the co-integration at work, and that looks, as a pair trader, that looks like an attractive chart to trade. So if we go back, the signal was generated on the 2nd of July. So now we need to check news. So quickly we go to, let me see, that's a earnings report. I'm going to take you straight to the websites of these companies. First off, so Alliance and Bernstein, if we go to their, where are we? Give me a second. News releases. So the news releases, remember the pair trade analytic generated the entry signal on July 2nd. So we have nothing here. They just announced assets under management in June, then again in July 11th, but there's no announcement for AB, so nothing there to cause the move. However, when we go to KKR, we see what we think caused the move, which is, let's go back. KKR is such a very busy business. They have so many acquisitions and divestitures going on. Let's get the right page here. So, all right, so previous to the signal, June 28th, no, this is just an interview with one of their execs. Now, this is important. So on the 2nd June, this is what I think caused the signal to be generated. KKR completes conversion to a corporation from a limited partnership. Okay, that's important because what does it mean? We are pleased to have completed our conversion from a partnership to a corporation. Henry Kravis says the decision was designed to broaden our investment base, simplify our structure, and make it easier to invest in our shares. So increasing liquidity and broadening their investor base should lead to a slight re-rating in the stock, and therefore the price should go up given no changes to the underlying business model. And effectively that looks like what has happened here. If we go to KKR, if you see here, this is just July 2nd. So when they announced that they've completed that, they had a nice 2-day move, call it 3-4 day move in the share price. Okay, but why? I mean, is that really a fundamental value changing event? It is an event in the sense that you have a greater demand for the shares because more people can buy them now because it's not a partnership, it's a limited company. It's a corporation, but the underlying business remains the same. And let's be clear, that announcement was announced previously, so there's nothing new in the market. All they're doing is just confirming that it's been completed, but they've said well previous to that would be done. So I look at it and I say, yeah, it's an event that's driven by news, but at the end of the day, it doesn't affect the underlying value of the business. It may affect the liquidity of the shares, but it doesn't affect the underlying value of the business. So I would look and see if there's anything else that may have been driving that. And if we go back, there are two. The same day they announced they completed a Hyperion acquisition in Scandinavia, middle market business, not very large, certainly not a price moving event. And then the day later, which may have leaked into the market the previous day when the signal was generated on the 2nd. Together with Venado Oil and Gas, they acquired some Eagle Ford oil assets. Well, I looked at those. They're reasonably substantial assets. It's about 22 wells and about 4,500 barrels a day production, but they've put it into one of their funds, and that's a mid-market deal for one of their funds. So again, nothing there that is fundamentally value shifting for the investment management company, which is KKR & Co. These are all their funds investments, and all of them are during the normal course of business. So that would lead me to say that this is a legitimate signal, and I hope you would agree. So that's the news. Now we want to figure out where we're going with dividends and earnings. Well, remember, we're on July 2nd. The next dividend we will know is the record date is August 6th. Okay, so that gives us over a month. Average days in trade, 23.85 in the back test. That's probably enough. So you might say yes to that. Up to you. Then earnings releases, they released on the, I've opened this one here. They released on the 26th of July. We're on the 2nd of July, so there's 24 days till the earnings release. Okay, average days in trade, 24, and there's 24 days till the earnings release. It's tight. You might not want to do it. It doesn't give you any wiggle room. But let's look at the pair charts and let's think about the nature of the signal. I don't think it's a fundamental value-driven signal. I think it's a liquidity-driven signal, and I think it's going to reverse. So I like it, and I might be willing to risk the fact that we're going to have an earnings release within 24 days. So up to you again. That's on KKR. AllianceBernstein, they do pay distributions. And where are we? Calendar events. I think I don't have it here, but the distribution is again on the 26th of July. So you have a similar sort of thing, which is that you've got about 24 days until there's an effect. Okay, 26th of July they declared a distribution which is payable to shareholder X date of 2nd of August. So if you're following that, that's a pretty typical thing here. Every 3 months they're declaring these distributions. You would estimate that there's going to be, again, a dividend at the beginning of August, same as KKR, or sorry, I should say a distribution, same as KKR. But again, it's 4.5, 5 weeks out, and that's probably enough room. And then the earnings, just to save time, the earnings, they announced earnings on July 26th as well, so you have the exact same earnings situation with AllianceBernstein. So you make a decision whether you're willing to risk that based on when there's going to be new information in the market. But prima facie, we would look at it and say we can live with that. So let's quickly go to the pair chart review. So here's the signal. Remember, we don't have any of this, don't have the benefit of any of this. What we do have is the benefit of looking back at the ratio chart, and we can see that we are at an extreme, but certainly not at a breakout, and we have a flat ratio back and forth above the ratio, which is great. We like to see that. So that looks good. I would tick the boxes on that. Non-trending ratio and no breakout on the ratio. So are we at an extreme? Well, yes. We're way down at 20 on the RSI, which is a good signal that things have gotten a little bit extreme, so maybe they're going to turn around. It's also, it was lower before and it's starting to come back up. It got all the way down to 10 and now it's coming back up, which says maybe it's a good time to enter as well. Do we have any divergence? Well, I'm seeing lower low here, and then on this I'm seeing lower lower as well. So I don't see any divergence on the RSI chart, and you may require that in your trading plan in order to take a trade, but again, up to you. I do see a big extreme, and that might be enough given everything else to say let's have a go with this trade. Look at the correlation. We had very strong, over 80% correlation. Then we had a breakdown in about May, June, so in the preceding months. But when this trade happened, or sorry, when this signal happened, which is the second here, you can see there's been a very strong recovery in the correlation back to its traditional levels. So that might actually be part of what's driving the signal, and you have to decide whether that makes you uncomfortable or whether you're comfortable with it. I'm comfortable with it because I can see that it's recovered. If we were down here, I wouldn't be comfortable with it. So that's a look at the correlation. And then the final thing we do, so when I'm looking at this, everything I see so far leads me to say, hey, I like this trade. Nothing would tell me I'm not going to do it. The only thing we haven't looked at is the volatility. So let's just quickly Let's take out the correlation chart, put in the volatility chart, regenerate the pair charts. We can see the volatility here. So we've had lower vol, 1.4, but recently it's been increasing. So that's something you want to keep into account. It's up to 2.6. Anything above 2 is starting to get to be volatile. That may determine whether or not you want a position size at a full size or not. When I'm in this volatility range, 2.6, something like that, I would scale back position sizing. I would probably be at a 3/4 position size on this trade. So on balance, I look at it. I like this trade. I would have taken it. Let's have a look at the results again. Well, we can see the results here. It did reconverge. It went a little bit offside, but then reconverged quite quickly. The exit was on the 15th, and let's just quickly take a look at that exit. So the exit was on the 15th, and what did we get? We got, of the long leg, so the long leg made $473.10. This is on Alliance Bernstein. We bought at 28.17, sold at 29.65. The short leg also made money. So we shorted 389 of KKR at 25.77 and bought the close 389 at 25.10, and that made 210 bucks. So if you were on $10,000 a leg, you made more or less $683 on the trade, which is 6.8% return on nominal leg value of 10,000 aside in 44 days. We call that 2-to-1 leverage. And if you're using CFDs and you took it up to the 5.1 leverage ratio according to the latest European limits for novice traders, that's about a 17% return on your CFD margin in 44 days. Interestingly, the trade didn't come good in 24 days. It took 44 days. Always you want to think about that grace period between market events. There may be price moving, earnings releases, dividends, and the like. But despite that fact, the trade came good, and if you're in it, you made some money. Happy trading, everyone.